Welcome to our crypto podcast on YouTube, where we explore the world of cryptocurrency, blockchain technology, discussing the latest news, trends, and developments in the industry. Guys, whether you're a seasoned investor or you're just starting out, this podcast is built for everyone. And our goal is to provide you guys with informative, engaging content to keep you up to date in this rapidly evolving space. So much stuff is happening every single day, every single week, that it's very hard to get everything in like a 1 week podcast, but we do our best. So sit back, relax, join us on this exciting journey. Grab your cup of coffee. As usual, I got my little raw latte here, and let's dive right into the charts. As usual, we're taking a look at the Bitcoin on the daily chart. We can even zoom out a little bit. You can see my screen, Don.
Yep.
What do you prefer, weekly chart? Yeah, daily's too short term.
Yeah, weekly.
All right, so we're looking at the weekly chart here. Let me get everything nice. Okay, so as usual, we have the 50 and the 200-day EMA, just to give us something, like instead of just seeing candlesticks, just gives us some more data. As you can see, we did have that golden cross. If you've been watching our podcast for the last several months, we've been we started during the turmoil, like during the depths of the market, and as you can see, we had this huge golden cross right here, and we exploded through it. So I'm not worried. This is normal. We're having like a pullback on the weekly candles. I would start to like reevaluate everything. Like once we start breaking below, like what's this level right here? 25. So once we get below 25, it's like, that slaps me in the face. It's like, wow, we really aren't out of this bear market yet, because a lot of optimism over these last several weeks, but you know, anything could happen. I'm hoping we get like a retest of the 25K and then we move higher. Again, I don't know. You don't know. That's why we just have our simple DCA. The whole thing is we just have to pay attention. When things get boring, when things, right now is the time to pay attention, because we're coming up to that end. We're already almost halfway through the year. And 2025 is going to be the time you want to be paying attention. Ethereum. So Bitcoin's at $27,809. Taking a look at Ethereum. Same thing, weekly chart, we're sitting at 1854. We're still holding above our moving averages. Nothing too concerning, nothing too alarming. Again, if we start breaking below like 1200, then it's like, wow, I got to start buying more. Because right now I'm not really buying. Like I'm kind of like, it's in this weird, like Bitcoin and Ethereum, and you could probably agree with this, is like we're in this weird range where we can't really make up our mind yet. But as soon as we start finding that, that zone that we're going to start moving into, then, I'll dollar cost average like a couple hundred a month, but I'm not going in like with the big position, the big buys. Yeah.
Well, no, I agree. I don't think big position buys are good at any point unless you can identify that you're at a bottom. Like when we were at 15.5 and we were talking about this probably being a bottom. Both of us were loading up there, and we were giving advice to do that as well. But I think the dollar cost average strategy is really utilized in this type of zone where we're just kind of range bound. I think it's really good because it's terrible. I know even when you have the dollar cost average strategy, it sucks to like when you buy like on a Monday and then you see on Wednesday it goes down like a bunch and like, damn, I wish I would have waited 2 days. You know what I mean? When the price isn't moving too much and you're just continuing to dollar cost average, you're just accumulating at a level, and you just feel confident that you're getting a really good price, I think.
Yeah. And what's cool to look at this chart is when we look back in 2018, 19, if you look at this area right here, you would not think we went up 400, like from the low to the high, we went up like 350%. That doesn't look like it, because the chart turns flat. Like after we had this exponential growth right here, this turns flat. Like we can't see ahead. So like, let's pretend none of this happened over here, and we're just looking at like this hasn't happened yet, right? And all you can see is this. That's kind of like where I believe we're in right now on the chart. So like, yeah, it might look like boom, it exploded, but eventually this is going to turn flat once the bull market happens. And like, we already know what's going to happen. Like 99% sure. Like we're going to look back at this podcast and be like, we're going to be in like 2024 and prices are going to be breaking all-time high, and it's going to look flat. Like this is going to look like this, and then it's just going to have like, I don't like sitting here drawing lines on chart. It's kind of like ridiculous, but like just to give you perspective, when we break all-time highs, this is going to look flat. And then we're going to look back and be like, oh, and then maybe this was the top for that time being, 134%. We'll see. Does that make sense though?
It does. And it's become almost cliche in Bitcoin to talk about zooming out on charts. You hear it all the time. Oh, zoom out. When in doubt, zoom out. You hear that all the time. But I think it's really good, especially the longer you spend in this space, to really take a look at the whole life history of Bitcoin and take a look at the chart and then zoom out and look at like longer stretches of time. Like look at a 6-month random period, or look at a random 1-year period or 2-year period. And then like we always say, anyway, that's held for any 4-year period, and Bitcoin has always been up. So like look at 4-year spots and like hold us accountable and see, oh, look, let's take a spot in 2015. Let's take a spot in 2019. Where were you? And if you held, like, where were the high points? Where were the low points? Like, because it's easy, like when you see in the weekly or the monthly, like big volatility, to get like real riled up about it and to make poor emotionally based decisions based on that. But if you take that zoom out strategy and you think to yourself, this is such a small spoke in a larger wheel that I need to just check those emotions at the door and make sound decisions, you'll be so much better off.
Yeah. What I like to do is look at the logarithmic growth curve. So like right here, you can see we're at the max charts, and it goes back even further, but for CoinGecko 2014, the price data, you can see we have bull markets, bear markets, bull markets, bear markets, bull markets, bear markets. What's next? I'm going to get criticism for this one because this is like a newbie chart. But for people who are watching our podcast are most likely, just starting out, and that's okay. As we develop, as we build more skills, we're just started this podcast a few months ago. Like we're not going to be perfect, but we're going to have more like data for you guys. But I know this is a newbie like chart data, but for the new people just coming in, this is a great like visual understanding of like the logarithmic growth curve for Bitcoin. So this shows you like based on the rainbow chart, because it's basically this chart, but they put a rainbow to let you understand like the buying and sell zones. And 2014 in April, 2024 in April is this next halvening. And we talk about it all the time. We have it in our newsletter. Again, if you haven't joined our free newsletter yet, we'll leave the description, the link in the description. You can just subscribe and you'll get daily updates right into your inbox.
While we're at it, please, if you're watching this video, like it, hit the like button. And if you're not a subscriber, subscribe so you continue to get contact and when you hit that algorithm.
Yes. So as you can see, we like, I feel like the weak hands, the people that don't have as much conviction as Don and I, are the ones that are going to sell. The ones, I think the meme coins, and this is where we're going to get in our debate, is I believe it's a great opportunity for newbies to onboard into crypto. Right. Don thinks, yes, you're probably going to lose money, right? These have like 30-40% swings. And we stress, don't be a trader, be an investor. And investing in meme coins, if you don't sell at the right time, you're going to be exit liquidity for the early whales. But what I'm saying, Don wants to speak. What I got to say is I believe this is a great opportunity because I've already had people message me on Snapchat, Twitter, Instagram, text message. Hey, should I buy PEPE coin? What's this PEPE coin? And they were the ones that haven't like got involved in crypto yet. And they've been kind of like sitting on the sidelines. So yes, let us buy PEPE coin, lose money, make money. That's great. That's awesome. But like, if you lose money, my best learning lessons were from me losing money because I tried, maybe I'll make the mistake once or twice, but once you start making that same mistake 3, 4, 5, 6 times, it will make you, you have no choice but to become a better investor. Like, you know what I mean? Where it's unreasonable for you not to become a decent trader or an investor after you've made the same mistake over and over again. So keep like being optimistic and pushing through. Don.
I agree with your fundamental thesis on what you just said, but you're thinking as a educated, financially literate investor. My thought is most of the people coming into this market are going to be like any investors in any market, even in TradFi. They don't have a lot of experience, financial literacy, and understanding. So the risk of them going into a coin like Doge, Shiba Inu, PEPE coin, whatever the hell you want to call it coin, or any, X meme coin, the odds of them making the right decisions in both entering and exiting at the right times is so low. And then the problem is when they exit at the wrong time and they have the exit liquidity and they lose money, then they say, screw this crypto, screw Bitcoin, screw this market, and they just leave it. And they say, I'd rather either go put my money in the bank or go on, TD Ameritrade or Scottrade and trade, stocks, or, go buy AMC and GME. So we risk losing those guys before we even teach them about Bitcoin and about Ethereum. I do understand, and I've heard people really articulate it really well about how bringing them in with the meme coins gives them the entrance to the community. They can play around, and then they can, eventually find Bitcoin and Ethereum. That's great in theory, but my thought is that we're going to lose way more than we keep in that scenario, and that we should be telling them to come in and play around with Bitcoin and Ethereum first and make sure you have that. And then if you want to do these other things on the side, you can do that, but you have your solidified blue chips already there, that it doesn't matter as much when you get wrecked on PEPE coin or, dickwad coin or whatever coin you want to call it. I just think it's not safe for these new people coming in for that to be their first, entrance into our space, because I think that these rug pulls are just, they happen so quick, man. And I just think that, it's I've seen enough of these cycles to see people get turned off by Bitcoin or Ethereum, the good ones, the really, really solid ones, to be turned off just by price volatility, let alone actually being completely rug pulled and watch something go to zero.
Well, yeah. So I understand where you're coming from. Like, not everyone's going to have the mindset of like a growth mindset. It's like, oh, I lost money. Yeah. It's like, oh, crypto proved my point. Everyone's, told me different otherwise. Like, yeah. But, if you are like a pioneer, like, yeah, now I understand where you're coming from, but like, yeah, that makes sense. I want to be a little, I don't really want to talk about myself, but yeah, I got in April 28th, and I have the conference. I got the on the Etherscan. I have, it shows everything's transparent. It shows the buys and stuff. I put $130 in. I was like, because people got in way earlier than that, and they made millions of dollars at this point. You know what I mean? It's like, then it turns to like 5 million at 14 million at the high. I'm like, you know what, I just put $140 in. I would consider myself a more experienced investor. And I was like, this is going to be gamble money. I paid like $35 in gas. This was before gas prices were going to like $60, $80 just to make a transaction. And I took this is how I played it out. I had $130. I sold here. And then I made it a completely risk-free, but I was in profit $20 after gas. And I was like, let's see what happens. Starts to sell off. Boom. And then I sold the rest of my, not the rest of my position. I sold more at the very tippity top. I remember 0.4, like 152. And
you have two things going for you.
Yeah.
You have two things going for you, that, and I completely understand what you did. And somebody like you can safely do this, right? Two things going for you. Number one, you had a plan.
Yeah.
Number two, you're a logical investor. Those are two necessities that somebody needs if they're going to even attempt to mess around with these meme coins. And the facts are 99% of people coming in to do it don't have those two things, so they can't be successful. You're basically asking them to go in a casino, stay there for a whole week, gamble every single day, and they're going to lose. Because the longer you gamble, the more the higher likelihood you have of losing. You know what I'm saying?
All right, right here. So, guys, for people thinking like I'm lying, and I'm not like proud of this, because like, yeah, like anyone could have made money, but what I'm proud of is that I was in before all this. Like, I was accumulating during the speculation phase. I just made a video about this too. Like, you just seen it. There's 4 phases of a crypto coin. We have the speculation phase, the retail phase, the offloading phase, and then we're going to go back into the accumulation phase. And I just made a video on it. All right, so let's see.
It's on all our socials if you follow all our socials.
Yep. So let's see. I bought a few meme coins right here. right. So right here, 10 days ago, right? Let's hit this transaction. I bought 0.07 ETH, which was around the time, it was like $133. Look at, look at that trade. 130 to 1077. So I made 1,000% right there. You can see this isn't like a lie. This is transparent blockchain timestamped immutable transactions. 130, Don.
You know what I did during this whole Pepe coin stuff? I bought about 620,000 more Satoshi. Added it to the cold storage.
I took profits in Ethereum, so that's good. But let's go back to the transaction. So we have that, and then I sold more. So let's look back at this. So we have the first buy was right here. So 0.07 ETH for 511 million shares of Pepe. So that was, and if you guys don't know how to like read the Blockchain Explorer, like just message us. We offer like free trainings and stuff to help you. So you can see $130 because this is the wrapped Ethereum at the time, the time of the transaction. It's for 511 million shares, which is worth 1,077 now. All right, so that was my first buy, but it wasn't worth 1,000 at the time. It was worth 133, obviously. That's what it's worth now. So we have that 0.07 ETH, and then 3 days later, I approved a transaction to sell, and then I sold 155 million shares, which is $327. So that's the point where I was talking about where I made it risk-free and took profits right here. And then later I sold even more. So basically how this played out is I took profits, I made it risk-free, and I still have skin in the game. So I'm up like about 500 on it, and I still have a shit ton of coins right now that I'm holding just to let it ride. I know we're in offloading zone, and we talked about that in the 4 phases, the speculation. So, oh yeah, that's another thing I want to show, the date. So 10 days ago, 0.07 ETH, 10 days ago, let's go to the transaction. April 28th, right? You see that, Don? April 28th. Yes. And that is, we can look here. We can look here. April 28th was right around here. See the down here, the time frame? April 28th. So I bought during the speculation phase. Retail jumped in. Took profits during retail phase. So I practiced what I preached because I said when a coin goes up 200, 300, 400%, you want to start reevaluating your position, make it risk-free, take some profits off the table. And then now we're in the phase 3, which is the offloading phase. So whales are dumping. There's FUD. People are like, their conviction is kind of blurred. They're like, maybe this wasn't a good time to buy. Like I said, like right now is the worst time to buy. Like I'm not buying Pepe right now. And it's going to continue to sell off until it reverts back to its mean. And then it's going to be in phase 4, which will be accumulation phase, which I think it's going to revert right back down. It's going to look like Sandbox when it pumped. And it's going to just come back down. And
that's not, but Sandbox has utility though.
Yeah. Well,
what's the bull case for Pepe coin to have another run in it? Like, what is it? Yeah. What is it going to do? Like, what does it do for people outside of just, the mania that led to the first part? Where does that mania come from the next time? Because a lot of the people that put their money in, like, you did up before, were like seeing something that was about to occur happen, like that one-off. Mm-hmm. So most smart investors that helped pump that first run aren't going to be dumb enough to do it the second time. They're just going to be waiting, right? So where does that big money come from to do it?
Right.
You know what I'm saying? I'm asking it as a question. I'm not saying it like as a blanket statement.
Yeah. So what's going to happen is we're going to, like I said, we're going to go in that accumulation phase. People's conviction are going to be tested. People are going to be like, and then people are going to accumulate. And I think it's going to have, if you look back at Shiba and Dogecoin, it did the same thing. Like I can show you the chart back in the day, bro.
But to be fair, without Elon, none of that happens.
Come on, dude.
I think if Elon wasn't pumping Doge,
What about Shiba?
we never would have seen
Let's go to
70
Shiba
cent Doge. If he wasn't on Saturday Night Live, we don't see. I mean, you literally watched. It was crazy, like clockwork. You literally saw Doge selling off, like right as Saturday Night Live was like ending. It was selling off. It went up all the way up to when he performed, and then you just watched it basically lose like half its value.
Buying PEPE coin now, I would say it's hard. I would say it's either this one or it's this one.
I think now at this point, Doge actually has a community.
Yeah, because got a huge community now.
Nah,
I think you're following the wrong Twitter accounts, though.
It's the it coin right now. It's just the it coin. You know what I'm saying? Like, these coins at the end of the day, they have to, like, I've been around long enough, dude. I've seen like 25, 30,000 coins. Like, I can name coins that don't even exist anymore that you wouldn't even have ever heard of. You know what I'm saying? Like, these coins, they have their time in the sun. And that, dude, I remember when Tron was like a thing.
I bought
Justin Sun's Tron coin.
That's when I first, Tron's how I got into crypto, TRX.
Yeah, that like Justin Sun was supposed to make that like the big next thing, and he was notorious for like tweeting like these surprises that were going to come that never came, that would pump the coin, and then the thing would never happen. And then finally the community caught on and was just like, all right, this dude's full of shit. But I mean, it's not hard in the social media age to like have somebody with a big following tweet something and then it to catch fire. But then eventually markets, like, the best thing about a free market system is markets will set prices, right? You'll have these crazy phases where things will go like crazy volatile. You'll have Dogecoin hit 70 cents. You'll have Pepe coin do what it does. People made money in Shiba Inu. But at the end of the day, there has to be value. For things to actually hold market value, they have to do something, right? Like gold, like silver, like Bitcoin. You know, the only thing that's ever been created that doesn't do shit that is still around is the United States dollar, and that's only because it has the government, the Pentagon, and the army behind it.
Yeah,
that's the biggest shit coin.
Well, yeah, we talked a lot about it.
We've hit that ad nauseum, though. We don't have to go.
So let's move on. So what was the after effects of all this meme craziness? Well, significant congestion on both Bitcoin and Ethereum network. So as you can see, we have a lot of pending transactions. You know, that's crazy. 461,000 unconfirmed transactions on the Bitcoin network and 185,000 pending transactions on the Ethereum network.
I would advise, if you're going to dollar cost average in the next like 24 to 48 hours, to probably hold off, because you're probably not going to clear your transaction. Like, if you're trying to buy $100 of Bitcoin or $100 of Ethereum, it's going to sit for a while.
Well, even if you were trying to buy like a sandbox token on Uniswap or something, let's say you put $100 in and then it's a $30 transaction fee, you're already at a 30% loss. And then you got to
I'll tell you what, though. This is a good time to see how much the exchanges are centralized, because if you go on I wonder, I don't know, because I haven't done it in the last 48 hours. I haven't bought on an exchange, so I couldn't say. But if you went on Gemini right now, or you went on Coinbase and you bought like $20 worth of Bitcoin, I wonder how fast it would clear, because what you're really buying is paper Bitcoin, right? Until you take it off and they have to actually settle that transaction on the blockchain. Yeah. Because they don't have to settle it. You're still getting credited, right? Like, when I go on Gemini and I buy any coin, it automatically credits my account, but it isn't settled. Yeah. It doesn't get settled until I pull it off and put it, like, let's say I buy $100 in Bitcoin on Gemini, right? I dollar cost average. It shows in my Gemini account right away in my account. But if I'm going to pull that off in cold storage, it would take a while to come to me. Right now, it would take probably 2 days. So it just goes to show you, like, these centralized exchanges, you're buying basically a paper note of the Bitcoin. You don't own it.
Yeah.
You don't really own the Bitcoin.
And that's proof in the paper right there.
And that's just the bigger conversation that, you know, and again, I didn't talk about this before, but I've been having a lot of interactions on my Twitter Like when I'm posting stuff on my personal Twitter from our pages, a lot of people are like, have been talking to me about, it's still something we still have to talk about because people are still having a hard time understanding that FTX exploding was not Bitcoin failing.
Yeah.
You know what I'm saying?
Yeah.
And they're also equating FTX failing to, okay, First Republic failed and First Republic failed, but they got bailed out by the FDIC. So that's better. And it's like, no, it's not, because FTX failing and having no backstop is how a market should work, right?
Mm-hmm.
When something fails, there should be no bailout. They failed. The people that invested lost. That's how a market should work. It shouldn't be, oh, you invest, you take risk, right? But then when the risk fails, you get made whole. That's not risk,
Mm-hmm.
right? It's like the example I give. I go up to the roulette wheel and I put my money on black and it comes up red and they give me my money back.
Yeah.
That's not risk. That's a free roll, right?
Mm-hmm.
So when you put when you're investing in First Republic Bank, like all those big investors, they're getting made whole. They're not risking. That's not a true market.
Yeah.
You know, as bad and as shady as FTX was, it played out the way a market should play out. People invested, people trusted, even though with Bitcoin, it's a trustless project, which I said in one of our last videos. So you need to understand that when you're investing in Bitcoin or when you're putting your assets in Bitcoin, you need to put it in a place where you own your keys. So FTX failing has no effect on you. You can buy it on FTX, buy it on Gemini, buy it on Coinbase, and then pull it off, right?
Yeah.
Use them as the on-ramp and then pull that off so you're not holding it there. So if they fail, it doesn't affect you. FTX failing or even Coinbase failing, all of them can fail, but Bitcoin doesn't fail when they fail.
Mm-hmm.
And that's a concept people still need to really try to grasp. And that's our job, me and you, Define Productions, to help educate people on those differences and understanding like holding your own keys is the whole reason why this was created, to be your own bank.
Yeah. Yeah. That's something we really need to drill into people's heads, you know, especially for newbies. What I'm looking at right now is some of the trending things on Twitter, and you can see 1000x Gem. You know, we have Ordinals, Coinbase. Well, Coinbase, we can pull up this article right now. Coinbase is considering establishing an international hub in the UAE. They've been more forward thinking than the US. Maybe you think it could just be a scare tactic to the US?
No, I think it's an honest. I think it's serious. I think, me personally, when I hit that number, that generational, you know, wealth, when I get to that spot that I'm looking to get to, the one place in the world that's on my bucket list that I wanna go to is Dubai.
Yeah.
Everything I see about that city is so cool. They're so forward thinking. The politics and maybe some of the other background stuff is not the greatest, but like the financial aspect, like they know what they're doing financially.
Yeah.
Over there.
Oh yeah.
They're building. Over
like
there.
Not just building, they're building infrastructure everywhere.
Yes. That was just like I meant it in all aspects.
Yeah.
So I can see somebody like Brian Armstrong thinking about getting involved over there.
Yeah.
I think that would probably be, I think even if not the state of things crypto wise in the US wasn't the way that it was, he'd still be thinking that. But I think that because it's just pushing him even more so towards doing that. It's a good business decision, even though I don't like Coinbase.
Yeah. You don't like Brian Armstrong?
I don't like Coinbase.
Yeah.
As a exchange.
Well, speaking of exchanges, let's talk about some of the Bitcoin leaving exchanges for people that also don't like Coinbase or.
Bro, this is huge. This is really, really huge, and it will really matter when we hit the halving and then we hit peak bull run. Like this is the type of shit that's like rocket fuel, right? People aren't necessarily paying attention now because we're range bound in this bull or bear/bull. We're not really sure where we are yet. We'll know later on when we zoom out, but we're definitely not peak bull at this point. But like only having 1.7 million Bitcoin on exchanges right now, and it says, you know, TikTok right there, dude, that is huge. What that means is when Bitcoin is trading actually trading, of the 21 million that'll ever be in existence, only 1.7 million of it trades hands for these trades. That means like 90% of it is illiquid. It's not moving. So the prices can move so big.
That's crazy.
When you're, and again, you got to remember that it's going to half. The amount that will be released is going to be cut in half in less than a year. So this type of stuff, like people that want to get in will be fighting over crumbs, right?
Mm-hmm.
My shit hasn't moved in 5 years. I've only added to my stack. I haven't moved a coin away from me or a Satoshi away from me since February of 2018. And there's people that haven't moved coins far before that. And there's guys that came in this last run that they're accumulating and they're not moving. So there's a lot of us. There's a lot of Bitcoiners that are just like hardcore, like I'm dying with my stack and it's going to the next generation, generational wealth type stuff, where when people want to get the Bitcoin or want to get like it's going to be Satoshis that we're talking about, not like full Bitcoins. And I say this number, I've said it many times on previous podcasts. There's something like 55, 56 millionaires in the entire world, right? Of 8 billion people, there's only 56 million people that have $1 million or more of net worth. There's only 21 million Bitcoin. Well, not all those guys have Bitcoin at this point. And when they do decide to get involved, there's 1.7 million left for them to try to get at. So these, Balaji type prices of $1 million Bitcoin or like it, you can't think in today's terms, man. You got to think of like where things are going, and it's a process. I know it's hard because we're thinking in today's terms, and Bitcoin today is 28,000, and we're still thinking of, okay, the banks are failing, but they're trying to save it. And you got to think long term, man. When you're an investor, you got to see the long term picture. You can't invest for tomorrow. You can't invest for 6 months. You can't invest for a year. You got to put your money in things that you can believe are going to be here long term.
Yeah. That's crazy. So there's 54 million, like explain that, like dive into that.
Okay. So we got 8 billion people on the entire planet, give or take 100 million people on either side. Of all those people, there's 56, give or take, maybe a couple 100,000 millionaires in the entire world that have $1 million or more of net worth. 56 million of those people. 21 million Bitcoin will ever be mined. Something in the neighborhood of 19 million to 20 million are available now out in the ethos. What we're showing right here is only 1.7 million of those are left on exchanges right now, which means the majority, 85, 90% of Bitcoin is being held by people like me that haven't moved their coins in 5 years or more. So when the millionaires decide it's time to start getting that safe, secure, sound asset, and they come flooding to exchanges to buy it, there's not going to be a lot for them to get. And when the big money like that comes, what is the price going to have to do? It's going to have to go up. The price of Bitcoin is going to be priced in tomorrow's dollars, not today's dollars. So looking at a $28,000 Bitcoin is not what you should be looking at. You should be looking at the future of where the price will be when these guys that have the wealth decide USD is going to fail or CBDC is not where I want my money to be, and they look for safe, sound, secure assets, and they thought of gold before, but they finally realized that it's the new age and the digital assets are where I need my money to be, and Bitcoin is that digital, safe, secure store of value.
That's crazy. That's how, dude, it's good. People are going to be fighting over Bitcoin. It's going to be an all-out digital war.
Yeah.
People are going to be in the metaverse like, give me that Bitcoin. That's
yes.
Great. That's a really good...
With a straight, like, serious face. Yes. That's what's going to happen.
Wow.
And it's irrelevant. It's irrelevant if it happens in my lifetime or my kid's lifetime, but it's going to happen. And I know that it will. It's like, it's not if, it's just when at this point. And I can confidently say that now because I've been around long enough where I would say it and I wasn't quite sure because of how the world was reacting. I mean, you got to remember, I got in this peak bull run stock market. 0 interest rates. People were making money hand over fist in their 401ks and the stock trading. Like, it was like times were great. We got past the financial crisis. It was like the dollar was great. Stocks were great. The system appeared to be great, even though those of us behind the scenes knew the real Ponzi scheme that we were engaged in. But the overall general public is like, everything's, we don't Bitcoin, it's something fun to play with. You guys are thinking that the system's going to crash. You guys are just doomsday, naysayers, like zombie apocalypse guys. It's never going to happen. And we're like, yeah, like it was tough to like preach the good word when, everything was great and the stock market was up 20% every single year. Fast forward to 2023, here we are, bank failures, rates are up, doomsday. People are actually seriously talking about the dollar failing, or actually having conversations about 19 countries joining the BRICS nations, of finding another reserve. Like, these are real conversations now. 7, 8, 9 years ago, we said this could happen in quotation marks, right? And people thought we were nuts. And here we are. It's like a legitimate possibility or a legitimate reality. And now us Bitcoiners and are saying, like, we told you so. Like, this is what we've been saying. It's not if anymore. Like, it's just when. Like, you can only prop this up for so, the jig is kind of up. You're only going to be able to prop this up for so long. Are you going CBDCs? How much longer are we going to drag this out before it just fails?
Yeah. I
don't know. I think that the first trillionaire will be a Bitcoiner.
Well,
could be wrong.
So we dove into a lot of stuff today, charting, Bitcoin coming off exchanges, scarcity, PEPE coin, network congestion. Is there anything else you want to add before we wrap this up, Don?
Go to that. Let me find it. It's the BitPain is the Twitter handle. I want to read what he put because I thought it was really good. That's why I sent it to you. Yeah, it starts with Taproot made it easier. Do you have that one up?
Yeah, I got it right here.
All right, I'm gonna read it and just kind of scroll down as I read it because I think this guy, he put his thoughts together really, really well, and I want to give him credit. BitPain 648 on Twitter. Taproot made it easier to spam the Bitcoin blockchain. There is now an influx of spam transactions. The meme pool is processing them as designed, and fees are adjusting upward as appropriate. This is resulting in extremely high transaction fees, the highest ever seen on Bitcoin. This has pros and cons, depending on which group you belong to. For miners, this is excellent. They are being paid a lot more to mine. For plebs looking to transact, this is bad. It is now more expensive to make a transaction. For hodlers, you are basically unaffected, the people holding in cold storage like me. Incentives overall are working as they should. People spamming the blockchain are paying enormous fees to do so. Why are they burning money like this? They are using block space to mint shitcoins via ordinals, which they hope to sell for more than the cost to mint. In effect, this spam is being funded by the shitcoin speculators buying these tokens, who are paying more for them than the minters are paying for the block space. On one level, this is supply economics at work. At the moment, the Bitcoin blockchain is vastly underutilized. So people have found a way to make that space economically productive and are willing to pay for it. Some are arguing that we shouldn't allow spam like this because it raises costs for legitimate uses of block space and want to restrict the ability to inscribe ordinals. But for what it is or isn't legitimate usage of block space is open for debate. Regardless of how you feel about it, this will only last for as long as the attack is subsidized by people's appetite for ordinal shitcoins, at which point people will start losing money doing it and will stop. This is at least two big benefits in my opinion. It will make people realize that the low fees we have been enjoying are unlikely to last, and hopefully will shock people into working hard long-term scaling solutions, even if the current source of demand is unlikely to last. The second is that it is a direct subsidy for mining. The transition period from a blockchain fully funded by the block subsidy to one funded by transaction fees is an uncertain and vulnerable time. Why? Because before Bitcoin is fully monetized, it won't be widely used as MOE. Use of the block space for purposes other than Bitcoin transactions could help bridge this transition by allowing valuable block space to have alternative uses. Whether that is needed at all is an open question, but at least a potential benefit. There are definite downsides, particularly for people who rely on low-fee transactions and are not paying more. But it's a free market, and miners sell block space to the person willing to pay the most for it. At the moment, like it or not, that's shitcoiners. I am generally opposed to censorship-based means of stopping this, as the market incentives should take care of it longer term, even if it's annoying in the short term. I also think it's good to have a stress test of high fees, as it helps reveal weak links for scaling. That was really good, I think.
Yeah.
Really good.
You want to dive down to this?
Yeah, the market is basically, we're allowing the market to kind of take care of itself. So if these ordinals are worth the fees that are being spent to mint them, then it's going to be good. People are going to pay it, and it's going to be a thing. But if it ends up not being the case, then it eventually dies itself out, and we go back to the way that we were before. But we also have to understand that like these low fees on the layer 1 Bitcoin will not last forever. That's because as Bitcoin goes up in price, it's going to cost more to transact for the miners to be incentivized to mine those blocks. Another reason why you want to scoop up as much Bitcoin as you can now, because it's really a store of value. It's not like cryptocurrency is not Bitcoin. Bitcoin is not cryptocurrency. It's not a currency, Bitcoin. It's a store of value. Gold is not a currency, right? You don't walk into Target and go buy groceries with gold, right? You can't do it. Nobody's going to take it. But gold has value, right? Gold is still worth $2,000 an ounce, even though you can't take that $2,000 gold coin and buy anything at a store with it. Just because it's not taken at the store doesn't mean that it doesn't have inherent value. That's Bitcoin. I'm not going to go to Target. I'm not going to go. Like when I see people try to say, oh, we're going to accept Bitcoin, it's like, why? I'm not spending it. I'll use a stable coin. I'll spend Ethereum. I'll spend one of those other coins, but I'm not spending my store of value.
Mm-hmm.
So the transactions are going to be inherently higher in the future, because at some point, right, you got to think long term. We'll all be dead at this point, but Bitcoin won't. So in 2140, when the last Bitcoin is mined, the miners will continue mining based on fees. So either Satoshis have to be worth a lot, or the fees have to be high, which I think it'll be a combination of both. If you look like longer term, I think it's like on the last blocks, it's like hundreds of Satoshis are what you're going to get mined for every block. It's something crazy. It's something absolutely phenomenal. So think about in 2140, how much one Bitcoin is going to be worth for miners to be using the electrical power or whatever power they're using in 100 years in the future to mine that Bitcoin, to be only getting a couple hundred Satoshis.
What is your price prediction for Bitcoin in like 2140?
I think it's too hard to make that, because I don't know what we'll be pricing it in 2140. Because we're thinking in terms of USD today, right? I don't think USD is around in 2140.
Yeah.
So is it CBDCs? Is it some other currency that maybe hasn't even been created yet? I don't know. Or is it the yuan? Like, I don't think it's what will the buying power be? It's not like, you know what I'm saying? Like, what will the buying power of one Bitcoin be? Will it be like an island? Will it be like a private jet? Will it be like, I don't know. Like, it's more like what will you be able to accumulate? Will it be generational wealth? Will you be considered the elite, the 1%? Like, that's how you have to price it. It can't be based on what will the dollar value be, because the dollar won't be here in 2140. It just won't. That's 120 years. It ain't making it that long. Bro, I don't know if it's making it 20 years. So that's the thing. Like, people get so caught up, and I used to too. Believe me, I did. Like, it's become so much easier to hold. Like I said, I didn't sell from 2018 until now. I watched my stack go from 69,000 to 15. And I didn't blink, because if I blinked, I would have sold. I have more.
That is Bitcoin. Crazy.
I have more Bitcoin. I have more Satoshis in my cold storage today than I had peak bull run.
Because of the
So I have more today than I had at 69,000, because I don't care about the 69,000 price. I care about the Satoshis that I have. Yeah. So I have more today than I had at 69,000 Bitcoin. My Satoshis are more. So my buying power in the future, and my family's buying power in the future, will be more than it was peak bull run at 69,000. That's the type of mindset you have to have in this market. And again, that's the type of mindset you have to have no matter what it is you're investing in, right? If you're a real estate maxi, if you're a gold maxi, if you're a stock maxi, whatever you invest in, like you got to think longer term and bigger picture. Like, and again, that's why my feelings on the meme coins are what they are, because I just know from speaking to many people about money, they don't think like that.
Yeah.
It's safe for somebody like you to buy a meme coin and effectively employ a strategy and profit. But for 99% of people coming in that have no experience in crypto, probably have like not a lot of experience investing, period, they're going to get wrecked. They just are.
Yeah.
They're going to get smoked.
Yeah. Well, today was definitely a really good session. We went for over an hour. It seems like probably our longest podcast yet. We usually go for around like 30, 40 minutes. And yeah, so we hope you guys enjoyed this one. You know, we put a lot of time and effort into these, and, you know, throw us a like, subscribe, and any comments or concerns, you know, feel free to, you know, give us some, you know, criticism, whether it's positive or negative. We always like to, you know, adapt to different critiques, and keep growing as we build out in this bear market. So thank you for watching. Like I said, give us a subscribe. We have all the links in the description. We have our Instagrams, our Twitters, our LinkedIn, our TikToks, and we have a free newsletter. This free newsletter will keep you up to date, and will give you like simple like understanding of like what a halvening is. So when you do watch our podcast, you understand kind of what we're talking about, like an ordinal, you know, halvening, you know, stuff like that, you know, might kind of go in one ear out the other. You'll have a better understanding, and it'll make these podcasts easier to watch. You know, you'll be able to watch from the beginning to the end, because, you know, if you're a newbie and you're hearing something you don't understand, you're probably going to like switch off to your next video. Right. And that's
yeah, for sure. If they watch I didn't mean to cut you off. I'm sorry.
You're fine. No, you're fine.
If you watch this start to finish and you really enjoy this, the best thing you could do for us is to hit the like button, put a comment, talk about something in this video that you agreed with, disagreed with. I say this all the time. I try my best to answer every single comment that is commented in any of our videos, either our shorts, either our podcast, and all the platforms. I try to interact. It helps us out. Like if you watch this from the beginning to the end, you obviously found some sort of value because you stuck around. So it's easy. We're not asking for anything, but just hit the like button, put a comment in there, even share it on a social with a friend so they see it and they can do the same thing. You know, it's tough to crack these algorithms and get everything out there and help people, because that's what we're trying to do. Like at this stage of our existence, we're just trying to like give free information and educate people and be like, you know, vessels for the space, and help people to get in the waters of what we believe will be the future of finance. When we make this transition from the system that we're in now to this brand new system, like this is what we're trying to do. And you can be a part of that journey with us. Like, and we want you to be a part of that journey. We want to help people. And unfortunately, you know, YouTube has the way that they do things with their algorithm, and sharing it, liking it, commenting helps that.
Yeah. Thank you again, guys, for watching, and stay tuned for next episode.
Don't trust, verify.